Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the CEO of Bit Digital, Sam Tabar. We're going to be covering earnings. In addition to that though, we've got a lot of subscriber questions for Sam and team in relation to their growth strategy, their outlook for 2024, and their HPC business. Now, before we get into all that, please take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below what you thought about the results from Sam and team, if you're currently holding Bit Digital, and your outlook for the remainder of 2024. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, highly anticipated. We've got the CEO, Sam Tabar, back from Bit Digital. Now, Bit Digital is coming off the heels of a huge session on yesterday's trading. Obviously, a lot of investors are picking up on this story, and we were just saying before we started filming here, the Ethereum story is definitely starting to generate some interest in the investment community. And for those of you who don't know, Sam and team have some pretty good Ethereum exposure we'll get into in today's presentation. So Sam, we've got earnings, we've got catalysts, we've got share price moving, and we've got you for the next hour. Thanks so much for coming, buddy. It's great to see you.
Thanks for having me. I appreciate it.
You're most welcome. So we'll get right into it here. I know you guys just came out with Q1 earnings. Very exciting timing on these because this was kind of the first time we were able to see those HPC margins. Sam, you had told us they were very lucrative. Obviously, that came to fruition here in the Q1 report. What else was kind of some of the highlights people should be watching for?
Well, look, our total revenue is over 30 million, which is a 266% increase compared to Q1 2023. Our mining revenue was about 22 million, which is a 166% increase compared to the prior year's quarter. We earned 410 Bitcoins, which is a 13% increase. And Bit Digital, as you mentioned, Bit Digital AI, we finally were able to disclose our margins, but we basically recognized $8.1 million of revenue during the quarter. We did have to gave a one-time service credit of 1.3 million to our customer just for compensation. During January, we're optimizing and the process, and so we had to give a little bit of a credit for that optimization, which we basically did really quickly. And they're very happy with our service, as mentioned, and as already announced, we are doubling the size of that fleet. So we think that obviously the revenue is going to be materially much bigger than what it is now. And today, just on the business we have alone, we have $150 million locked in over the next 3 years, and that is going to increase quite substantially. So we're very much head and shoulders above the rest in terms of the size of our HPC business. But yeah, everything is going great. Our GAAP earnings per share was positive 43 cents on a fully diluted basis, compared to a loss of 3 cents in the first quarter of 2023. And as mentioned, our HPC business is going very well, and that's really growing. So, speaking of the HPC business, we finally were able to disclose the margins, which is about 70%, maybe just about a little bit north of that. And I can get into that if you guys have specific questions.
Yeah, the repayment for I'm assuming it's like a performance mechanism you've got there in terms of utilization. Can that happen concurrently month after month if you don't reach certain targets? But obviously, it's your first period. So I mean, there's a lot of probably nuances to get used to and get everything and working well. But the margins were fantastic. You'd obviously discussed on podcasts. You couldn't give any numbers out, but you were saying the margins were better than the Bitcoin mining margins. And when they came out, even after that payment, they were still sort of north of 60%. So really good show there.
Thank you.
In terms of the growth, so if you're growing that HPC to be twice as big as it is currently, to 100 million annualized revenue, are the costs? I mean, obviously the energy costs are linear with the growth. So you'd be paying the the energy costs there. But what about other operating costs? Do they grow in the same correlation, or is there actually a potential? So what I'm trying to say is, does the potential overall margin increase as you grow bigger?
So it depends on how we achieve our $100 million revenue target. If the revenue per card will be likely lower in the next batch with our existing customer due to volume-based discounts and downward pressure on market pricing. However, our lease expense for the existing contract is accounted for above the line and thus decreasing gross margin. So the margin profile on the incremental contracts is very contingent on whether we lease any of the GPUs. But regardless, the margins of this business will remain very appealing or very fat, as I have said in the past, and people have caught on to that. And so we're positioned pretty well for that. One thing you did mention, Anthony, that I should highlight to the audience is that the amount of power we use to generate revenue is much more efficient than Bitcoin mining. So just by way of comparison, it takes 40 megawatts of Bitcoin mining to achieve 4 megawatts of HPC. That is the math, more or less, roughly, in terms of revenue generation. It requires 90% less power to generate the same kind of revenue on the HPC side.
Yeah, that's good. And actually, it was great that you put in your earnings report the actual breakdown of the costs themselves, like so how much you'd lease the machines for, the facilities for, and then obviously you'll have some staffing in there, but it won't be on managing. It's significant because if you're doing the Bitcoin mining over there as well in Iceland, I'm assuming there's sort of like there's factors that you can make savings on across all sites there. So that was really positive. I mean, the thing with Bit Digital is you've got a customer, and quite a lot of the other miners now are looking to move into sort of like the on demand, which is, again, it's great if you get good uptime, but you need good uptime to make that really work with the costs involved.
Yeah, look, I'm not a believer in build it and they may come. That to me is not a business. I've always said an AI business has to have the Holy Trinity, which is you have to have access to the machines. So you have to have that special relationship with NVIDIA. You have to have access to the correct data centers. You can't use the same data centers for Bitcoin mining as you would for these H100s. And thirdly, you have to have the clients. If you don't have all three, the machines, the data centers, the clients, you don't have an AI business, you have an aspiration. And, you know, if you announce an aspiration and if you see words in the headlines like potential revenue or things like that, that's just an aspiration. And, you know, we don't have an aspiration. We have a locked in business. By the way, this second tranche that we're going to be announcing very, very soon in terms of the details of that, the day one starts when we install. So that is 3 years on the second tranche. So that is a pretty awesome. We're basically good until we're going to be locking in hundreds of millions of dollars in revenue over the next 3 years. And that second tranche doesn't start until those machines are installed, which will be very soon.
Will those machines be will in the same leased in the same format as you've leased the first machines to, you know, first set of GPUs?
Yes. We reserved capacity in Iceland for this very scenario. And by the way, that can continue to go up. It doesn't end there necessarily. The client has insatiable appetite.
And in terms of model, is it the NVIDIA 100s that you're going to be using?
Yes.
Cool.
Hey, Sam, very exciting HPC AI update there, and I wanted to move to the self-mining now, eventually kind of trying to get an understanding of how this will all fit together, big picture for you between the AI, the Bitcoin prop mining, and the obviously Ethereum and Ethereum staking as we're starting to see developments there. But let's pause maybe for a second on the self-mining. I know you guys said 6 exahash is kind of the goal or the target right now. Are you still on pace for that? When can we expect to see that target? And how are we thinking about this relationship between Bitcoin mining and AI if the margins in AI are so lucrative?
Yeah. So look, to answer your first question, we continue to evaluate the post-halving Bitcoin mining landscape. Our goal of reaching 6 exahash remains intact. We're very live discussions on incremental hosting opportunities. We've always said that our 2024 growth on the self mining side would be back-ended because of the halving. And now that the halving has occurred, we're able to move forward on some growth initiatives and have a better picture of what the post-halving landscape looks like. But I do say that we do believe in, of course, the long-term future of Bitcoin mining. The question is whether these two businesses can remain under the same corporate umbrella. We think the businesses are synergistic. It gives us more than one lever to work with, but we have to do what's in the best interest of shareholders. And if our valuation fails to reflect the true value of our business, we have to think about what to do about that. We really love the capital allocation optionality of what these two businesses provide. We don't have just one lever. A lot of other people in our sector, there's this old saying, if all you have is a hammer, everything you see is a nail. So a lot of these guys and a lot of our peers, all they have is a hammer. So all they could do is have just increase their exahash. They don't have a very good capital allocation optionality model like we do. And so we like the fact that we have that additional lever. And we think that we're going to invest in obviously the highest return business at any given time. That gives us a huge advantage and a moat compared to other peers, because the others are just, all they can do is just invest in exahash growth and nothing else. That's all they can do. And that is fine, but you have to look at the returns profile for that. And if you don't have anything else on the menu, that's all they can do.
Good segue. Speaking of menu, you mentioned if they only have a hammer. You guys have hammers, you've got screwdrivers, you've got all kinds of tools over there, Sam, because you've also got the Ethereum division of the company and the staking that goes on there. So maybe just a quick refresher on how your guys' Ethereum wheel strategy works, and then where you see this fitting into that lever approach that you just mentioned.
Look, I have no time for crypto tribalism. I don't have any time or tolerance for it. I just want to do what's very profitable and what's in the best interest of shareholders. We were able to invent a business model where we actually created ETH and Bitcoin, put that together and made a 1 + 1 = 3. We invented a business model called the BitDigital Flywheel, in which we take the rewards from Bitcoin mining, we pour that into ETH, we take the yield from the staking of the ETH and pour that back into Bitcoin mining operations. It creates this perpetual flywheel. And today, we have the largest stack. I believe we have the largest ETH stack of all NASDAQ listed companies. We're really bullish on ETH. It doesn't take away from Bitcoin. Bitcoin's main competitor are the gold markets. Gold is a store of value. It has a $16 trillion market cap. Bitcoin is a much better proxy for hedging your inflation compared to gold. So generationally and structurally, we're going to see Bitcoin, which has, I think, about a $2.6 trillion market cap today. I have to look at that. But it has a way to go to eat into the gold markets. Gold markets is $16 trillion.
I think it's about half that, Sam. I think that the whole crypto market is about 2.6, and Bitcoin's about 50% dominant in that sector.
Right. So as you could see, not all of crypto, we're just talking about Bitcoin. Bitcoin's a store of value.
Bitcoin is half the whole pot.
That's right. So it's got a way to go. And gold is the enemy, not the other cryptos. ETH has a technology called smart contracts. And it has the ability to create if-then statements. It could rewrite the entire financial sector. That is very appealing. And that's ETH. That's the nerdy little cousin of the mother coin of Bitcoin. Bitcoin's the mother coin. ETH is the nerdy cousin. And that has a lot of value. And we're seeing that now. And we are the ones, not just in the sector, but in all of NASDAQ, to have the largest ETH. We actually stake the ETH so that we're generating yield. And we're taking that yield and we put that back into Bitcoin mining operations. I don't understand, by the way, speaking of which, I've never understood certain peers that don't hodl. If you're a Bitcoin miner And if you're not hodling your Bitcoin, or, we hodl Bitcoin, we hodl ETH, but if you're not hodling anything, that's like going to a restaurant and eating at a restaurant where the chef refuses to eat his own meals. Like that's crazy to me, for peers to not be hodling stuff that they're actually mining. That doesn't make sense to me. In any case, we hodl Bitcoin. We believe in that. We hodl ETH. We believe in that. We have the largest stack. And as you can see, there is a lot of movement now in ETH, and a lot of people see BTBT as a proxy, as a capital markets proxy for ETH. Rightly so, because we have all this ETH and we stake it. So people get exposure to the staking economics as well. It's a great play. And we're able to put those two together to make it work.
Yeah, it's really quite incredible, Sam. And I've asked a few CEOs. I was honestly a little concerned about holding that much Ethereum on the balance sheet because I didn't know the future of Ethereum, and it felt to me a lot like Bitcoin had a clearer path. Now with the developments this week and the movement we're seeing in Ethereum, it seems that was quite an astute move. What is the exit strategy for these cryptos, Sam? Because based on what your last comment, it sounds like you are a long-term Bitcoin maxi and you believe in this technology long-term. I asked Riot the same question, and Jason said, Bryce, this is plan B. This is what we're doing as a optionality to get away from fiat currency. We want to be a Bitcoin company. Do you guys have a HODL exit or sell plan at all, Sam? Or is it just accumulate as much crypto as possible?
Well, we do liquidate a little bit, obviously, for operations.
Yeah.
We do. So that's important. But hodling the stuff that you have, like a Bitcoin miner should be hodling some Bitcoin. I'm sorry, that doesn't make sense if you're not doing that. But yeah, we hodl our Bitcoin and we hodl ETH. And the only exit strategy we have on that is to liquidate some of it in order to fund our operations. This may sound like a surprise to some of you, but I don't necessarily want the ETF ETH to actually be approved this time around. I hope in a way it's delayed because I want to stack more ETH, because that eventually is going to happen. And we'd rather it happen later rather than sooner. But even if it happens this Thursday, we're in a really great position to be enjoying that. And we knew that was going to happen. But if it doesn't get approved, if the ETF ETH does not get approved this week, it will eventually get approved, just like the Bitcoin ETF got approved eventually. And the capital markets will see BTBT as one of the only few things on the menu to buy as a proxy to ETH, which is great.
It's interesting. I mean, with you saying and it looks like you are one of the biggest, certainly in the mining industry, to have the largest ETH on your balance sheet. But when you consider Ethereum is close to 20% of the total crypto sphere. So we've already talked about Bitcoin being 50%, and it's getting close into that sort of high teens, the 17, 18%. So with those two together, it's nearly 70%. But is it retail investors holding Ethereum as opposed to sort of like, we've got on the Bitcoin side, you've got the likes of, MicroStrategy, you've got the ETFs now, you've got, Marathon and some others have got Hut and Riot have got reasonable stacks of Bitcoin. But on the Ethereum side, there's not many sort of like big holders out there.
Except us. And that's why.
I mean, it was just out of curiosity, right? And I mean, I know you've got a big stack of Ethereum, but it's just like we never hear about anybody else saying this is.
Well, you know why you never hear about it, Anthony? You know why you never hear about it? Because, and that's the problem with Bitcoin maxis. You guys are in a bubble. You guys are in a bubble. You're in a, what do they call it? An echo chamber. Maybe it's time for people to start looking at the other side and what's happening in crypto. There's a lot of exciting developments happening. I always make an effort to follow things that do not agree with me, and I've learned a lot from it. In fact, that's the tweet that I pinned in my profile. Always follow things that I don't necessarily agree with, because that's where I learn the most. And Bitcoin maxis are kind of in an echo chamber, and they think that Ethereum is the enemy. It's not. It's a completely different technology. Gold is the enemy. Ethereum is the financial institutions are very scared of Ethereum because it has the ability to rewrite the financial system. And that is a very dangerous thing for financial institutions. So much so that that's why JP Morgan and other banks have actually bought some shares in Consensus, which is one of the largest Ethereum, I think the largest Ethereum software developer in the world. Right now, the valuation of Consensus is in the billions. I know Consensus very well because before I joined Bit Digital, I co-founded Fluidity, and we invented the founding team there. I was part of the founding team of Fluidity, and we had a product called AirSwap with their own respective co-founders. But Fluidity owned AirSwap, and that invented a decentralized exchange, which was built on Ethereum. And we ended up selling Fluidity to Consensus. Joe Founder is one of the co-founders of Ethereum. So we were able to get to know each other very well. I understand Ethereum extremely well. And that's one of the reasons why we have that stack. Eventually people will wake up to the fact that Ethereum has functionality that is not competing with Bitcoin, just like people are waking up to the HPC business. It'll happen.
Good point. Just a couple of questions on going back to what you said earlier about return on investment. So you've articulated that 6 exahash is still the target.
Yeah.
But if it determined that actually HPC business is really going from strength to strength, could you determine that like actually we may as well focus our money in that because we're going to get a better return, or actually you were saying no, the separate business at the moment, and we're
let me tell you what's going on. I've got the retail guys on Twitter telling me they're just focused on exahash. They're not focused on shareholder returns. They're just focusing on exahash, the weirdest fetish. And then you have the institutional investors that I meet on a roadshow, and they're saying you should be focusing on the HPC business because that's real and that's very lucrative. Guaranteed. No volatility on that. So I have the institutional investors telling me focus on the HPC business. I have the retail guys telling me, hey, focus on your exahash. And I'm not getting credit on either. The institutions don't want me to do digital assets. The retail guys don't want me to do the HPC business. So we have to start thinking about it. Maybe I need to spin the HPC business out. I may have to do that because I'm not getting the valuation uplift that we deserve. We deserve a way bigger valuation. It's crazy where we're trading. And we're about to announce this contract, the second tranche. So if we're locking in all those revenues, and we have, by the way, like I said, we have the largest ETH stack in NASDAQ. You could do the math. If you look at the last monthly report of what our ETH stack was, feel free to do the math now. Look at our digital assets, our liquid holding is crazy big if you included the digital assets and the locked in revenues from this HPC business. And the fact that we have no debt whatsoever, look at where our market cap is. It makes no fucking sense.
And actually, that was my next point to bring in is to when I look at the sort of the valuation. Now, this couple of days I should have done it maybe this morning just to get the figures up to date because you had a really big rise yesterday in the stock price. And but if you just look at, if I just take your self-mining business and ignore the rest of it, because that's how I have to try and compare the businesses. Even though the miners have started, you're not the only miner to have separate businesses. Some of the miners have, BitDeer have, their self-mining is 40% of the business, and they're getting valued on 40% of the business.
That's
you
right.
guys, again, it's your. We already know what you achieved last year in Bitcoin mining. I think it was like 44 million. You've just achieved, 8 million in the first just over 2 months in HPC.
Just the HPC side.
Sorry?
Just the HPC side, yes.
Just the HPC side, I'm saying. And
that
so,
is growing exponentially very soon.
So what I'm trying to say is that even if we did a valuation, just using your hash rate at the moment in terms of Bitcoin hash rate, using your enterprise value, because that takes account of any debt, which you haven't got, and any cash and any Bitcoin or Ethereum on the balance sheet, and reducing that amount to your enterprise value. That way you can start comparing companies. If we look at your hash rate as it currently is at the moment at 2.8, it's coming out with this is before yesterday, so you know it's going to be slightly different now, but it's coming out at something like just about $50 per terahash, or $50 million per exahash. And when you compare that to some of these other miners that have been given a real premium from the market, you've got the likes of, you know, Clean Spark of $180 million or $180 per terahash. You've got Cypher $130 per terahash. You've got Marathon $130 per terahash. There's you at sort of like 50. And if you get to your 6 exahash by the end of the year, and again, just taking account of your Bitcoin business, it brings it down to 27. So you know, the market can't even value your Bitcoin business without even starting to look at what you're doing with the other two models. And I just, you know, it's a case of, you know, we keep saying, when are they going to pick up on this?
Sorry, what were we going to say, Dan? Were you going to say something?
I was just going to say, yeah, we've done this valuation metric, Anthony. I love when you do this because it's essentially saying you're getting your exahashes for a third of the price plus everything else you guys do, the HPC, the AI, the staking for free, right? And that's what we don't understand, Sam. And my question was, the spin out is definitely an option, but obviously there's a lot of logistics with that. Is there any reason maybe they wouldn't value the Ethereum, like because Ethereum hasn't received the ETF approval? Do the investment banks maybe not value that as though they would cash or Bitcoin or something, and that's why other companies don't hold it? I guess, is there any restriction to having Ethereum on your balance sheet at this point?
No restriction. No restriction. No restriction. Here's the thing: Bit Digital is just ahead of the curve, and sometimes, you know, when you're ahead of the curve, you're kind of punished for it.
Fair enough.
Maybe it's worth considering, Sam, is to sort of like highlight yourselves now as a high performance computing business that does Bitcoin mining as well. Okay.
Or become the MicroStrategy of Ethereum, which is what a lot of people.
Yeah. I mean, it's you know, the HPC businesses from an institutional investor point of view are far more investable than Bitcoin mining companies for the reasons you've already articulated in this conversation. And even then, you know, I mean, we know that Bitcoin miners are good citizens. So when demand is required, they'll switch off their machines, which is great for the communities. But from an institutional investor, that's not great. Right. Because institutional investors, they want what you call as they don't want dreams, they want reality. They want to know what the revenues are going to be. Right. And you know,
They want to model things out.
I see these updates from Cantor and JP Morgan and all the big analyst companies out there, and it's a lot of it's guesswork. It really is guesswork when it starts coming into, you know, how much it costs to mine a Bitcoin, how much not in the past, because the numbers are there. I can calculate in the past. I've been doing it for 3 years, so I can calculate every Bitcoin mined in the past. But you try doing it in the future. That's where the challenge is, when you've got so many variables that you don't even know. You don't even know how much you'll be curtailing. You don't know what the energy price is going to be if you're on the market rate. You don't know if the difficulty factor is going to go up or down. You don't know what the price of Bitcoin is going to be. How many variables you need before you start making it so difficult to calculate forward thinking? And whereas you just said there, you know exactly. I said to you in January, can't wait for February's update because I want to see 4 million in your update for AI. And when I got the update for February, it said 4.2 million, I think it was. So It's exactly what it says on the tin. All we wanted to know then was, actually, were the margins as good as you were saying in our last podcast? And you were sat there smiling, saying, you know, just wait a few more weeks, guys. You know, when he come out, you'll pleasant surprised. And I opened the results as soon as it came out that morning, and it was like, yeah, that's where we want to be. And
Anthony and I texted each other as soon as the results came out. Now, Sam, the next question, this is one we ask the pure play miners, and it's a little bit of a difficult question for them. It's basically, hey, Q1 was phenomenal, all-time high Bitcoin price, pre-halving, transaction fees, everything's great. Q2, up until a couple days ago, Bitcoin price was not looking so great. Halving rewards were cut in half. The question is essentially, what is your guys' plan for the remainder of the year if the macro conditions have gotten worse? In your situation, Sam, I would almost say this question kind of is supportive of the Bit Digital. So for you guys, it's almost on the other end of the spectrum, but where do you see the opportunities in Q2 now that you've got these levers?
Look, we're going to continue with our Bitcoin mining operations. We're asset light on the Bitcoin mining operations, but on the HPC side, we're going to be hiring a head of revenue. So that's going to be a certain catalyst from a great incumbent. We're going to double the size of the fleet in Iceland on the HPC side. We're also in talks to acquire a data center for the HPC business. Very important. That is real. And, if Bitcoin goes up, fantastic. That's great. Even more cream on the pie. So we're really well positioned for Q2. And I'm going to remain asset light. In other words, infrastructure light on the Bitcoin mining side. There are many regulatory issues when it comes to Bitcoin mining that we have to be very careful of. We were once in China. I think I mentioned it once in your last show. I can't remember. We were once in China. We thought that's a jurisdictional risk. This was years ago. We moved all our machines during COVID, which was hard. We, lifted all that out, tens and tens and tens of thousands of miners. We lifted all that out from Sichuan, China, into the United States, and they banned Bitcoin mining. And they're not talking about banning Bitcoin mining in the U.S., but they're talking about taxing it heavily. Or you've got people like Senator Elizabeth Warren just causing this drama after drama for no reason. So we have to be really careful. That's why we have this jurisdictional diversification. And I do not want to dig our own grave by getting infrastructure for the Bitcoin mining side, because if things go weird on the regulatory side against Bitcoin mining, you're kind of stuck. But on infrastructure for HPC, give that to me all day, every day. And that's why we're in talks with infrastructure to acquire on the HPC side, because that's solid. And there's no regulatory issue. And I could predict and do the cash flow on that business. The retail guys on Twitter are not going to give me credit for that.
No, but the people that know, I think there's an element that the Bitcoin maxes, as you put them there, and there are a few of them, but there is an element now that are seeing the benefit, and some of the sort of I'd class as some of the smarter inputs into the X space there. People are looking at it now and highlighting what likes of you are doing, what IRA's doing, what Core Scientific are doing, because they've partnered up with their CoreWeave, so you don't get much bigger than that, having that as a client there. And and then we have we'll wait for next week for Hive Digital to bring out their update, because I think Hive and Hut were effectively, because of the GPUs they had on their sites. I mean, Hive had 38,000 GPUs when they were mining Ethereum, so they were making the 90% margins during that period, and we'll see what their update is like next week in terms of where they've progressed to now. They're nowhere near where you guys are, but they're taking the steps now, and we'll see where that comes out there. But I think there's definitely now probably 80% of the miners now are looking in this space. I mean, Soluna today announced that their project Dorothy 2 has got the funding now. That's going to be rolled out this year. That's got 2 megawatts associated with it. Yeah, so 2 megawatts associated with it. And actually, they're a host company, Sam. They're a host company.
I know those guys well. They're really great.
Yeah. No, we had John last week, so. John, and that was a piece of the
smart guy.
We didn't know when that was going to be announced, but it got announced today. So good for them. But they've got this the Helix. So there's only about three, maybe 4 miners that aren't really looking at HPC at the moment. And the question is how long before they actually start looking at it? Because
exactly.
Everything you talked about and we've talked about on this podcast is effectively all the reasons why you should be looking at it.
Well, ahead of the curve is the comment that stands out. Now, Sam, it's pretty evident Bit Digital has taken a leadership role in the HPC AI. It's pretty evident you guys have taken a leadership role in the Ethereum strategy, that wheel structure that you've created. Obviously, you've got the Bitcoin mining. Is there anything else investors are missing here from the Bit Digital story?
Yeah, I think you capture it all. I mean, there are lots of catalysts in the pipeline, from an acquisition on infrastructure data center to, the next tranche that's about to be announced any week now, to being ahead of the schedule in terms of a $100 million target for the HPC business. Things are going very well. The only thing that's not going very well is how the markets are not giving us credit. And I understand, for example, when you guys do your analysis, I see the analysis that you do, and you're trying to compare apples with apples. And so we're not exactly an apple. But even when you compare apples with apples, we're still our valuation on the Apple side of it, like the Bitcoin mining side.
Still a pretty good apple.
But even our Bitcoin mining value business vertical is being valued at a discount. So, and I think it's because we're just not sending up press releases about exahash growth every other day, and I think this fetish about exahash growth is not always the correct metric for shareholder value. In fact, that could be a liability.
Well, we just seen we saw the announcement from Iron last week on their increase, not to get to 20 exahash per minute, but to now go to 30 exahash, and the share price is
the retail loves it,
and it sort of cements the fact that you're quite right. That they love the companies with the hash rate in place. It's like CleanSpot, Marathon, Riot.
Yeah.
Now you're going to get Iron, Cypher. There's sort of 5 over $1 billion market caps now, and that's even with effectively. If you think about this year, most of the mining stocks are still quite suppressed in terms of year to date. Last year was fantastic in terms of recovery because a lot of them, most of the mining companies went up 400-500% in value last year. But since year to date, until these last few days, there was only one mine that was really keeping its head above water in terms of price. That was CleanSpot, because it had grown 6x actually in February. You're not going to lose value on that. But I think you're right. I think the market's looking at these and saying, big hash rate. Not even looking at operational ability. Right. So it doesn't matter how many Bitcoin you're pumping out, because some of those miners up in that 5 there just don't compete in terms of operation. So big is great, but it's not. It doesn't always mean you're delivering the most. And then you've got like Core Scientific, who've got a market cap probably about 700 million, and they're pumping out as much Bitcoin per exahash as anybody else's every month. So maybe that they'll start. Now that your Q1s are out, or your latest quarter earnings, not your Q1, latest quarter earnings. Maybe the market starts reading that little section that says about the AI HPC business and starts giving you some sort of like real credit, because you can't put anything else in there other than the numbers, and the numbers all there stack up. These accounts get audited. You can't just start putting in anything willy-nilly. You've got to be accurate.
And I was gonna say, Sam, just like your comment about Ethereum not getting approved this week, I'm secretly enjoying the Bit Digital ride here, because it's a great opportunity to get in on these leading edge ideas before Wall Street's picked up on it. But we appreciate your time today. Obviously, phenomenal numbers coming out of Bit Digital. Market recognition is starting to pick up, which is something we've been talking about on here for quite some time. I know it's been frustrating you, Sam. Days like yesterday are exactly what we want to see to get volume, names, attention, eyeballs on these kind of companies. I'll kick it back to you for any closing thoughts, but congrats on a very strong numbers and delivering on the promises that you made to shareholders.
I mean, the only comment I'll say is, I'm Canadian, and hockey is a national pastime of ours. And there is this very famous quote from Wayne Gretzky, and he said, when I play a hockey game, I don't go where the puck is, I go where the puck is going. So he's got to visualize, where is the puck going? And that's my philosophy in running Bit Digital.
Great metaphor.
I'm Canadian as well. I also love that analogy. I've heard it. And the Oilers are in the playoff finals, it looks like. Speaking of hockey update. And he used to play on the Oilers.
I'm unfortunately British, Sam, but we all share the same king, so God save the king.
As soon as we get on to royalty, you guys, we cut it. Video's over. That's it. Sam, thanks so much for your time, you guys. Click the subscribe. Feel free to ask any questions below that we may have missed. Thanks so much, Sam. We'll see you soon.